Good morning. The time is now almost 11:30 in Bahrain. Today is May the 10th, and it's about 2 o'clock in India on a Sunday afternoon. We're going to be looking at the indices across the Dow Jones, the Nifty, the Sensex. We'll look at gold, we'll look at Bitcoin, we're going to look at a couple of things. Try to get a perspective on what I'm seeing in the markets as well. Now, let's start with the Nifty 50. The reason I'm taking this, or I'll actually start with the S&P, Bse Sensex, right? So just recently we had a bit of a lift over the 31,000 mark. It kind of popped up, lasted for a day, and then just came back as if nothing happened in the markets. The best way to look at this is on a daily chart as well. And when you see the daily chart, you get a better picture of how things are panning out. Let's do 1 day, okay? So this is what the markets are looking like right now. Now, if you look at it, you can see it's almost been a sideways chop. You went up, you had this wonderful rally, came up, started then, chopping around for the last almost 3 to 4 weeks right now. It did go above the 31,000 level, 32,000, almost touched the 50% retracement here, and then it just, drifted back down. And I think that's the important thing to see. So we still have a long way to go to reach that 41,000 level. We may not reach it right now. Everyone has been, I think, during this period thinking, yes, the market will, kind of like fall down from here. And I think I've said this in previous videos where when you in between the 38% level here and the 50%, that's basically when this, toppling over starts happening. This was almost a classic move, in terms of reaching that 50% level and then falling down. If it had gone above this and stayed above this, then we could have seen a rise back up as well, or it could have inched its way back up. But we've also broken the trend line. It's come back down, broken the trend line, and it's going a bit of sideways. And now the question is, what are we going to see on this week as well? So as you can see, the momentum is also slowing down as well. No squeezes developing on the Sensex, so that's very interesting as well. My feeling is that looking at the movement, it could be going. It could either pop, and if it does stay above, let's say this 31,000, 32,000 level, then we could be looking at further upside. Till the end, close to 18th of May, and then making a correction there as well. But maybe this week will be up, the coming week will be up, and then the week after that, which is May 18th, we will see it going down and retesting these support levels as well. I would like to see that happen because it's going to be very interesting. It gives me some confidence that, hey, the whole economy is trying to waken up from this lockdown. India in particular, I mean, the numbers have been rising, but the markets have been soaring, and I think that's what people are just scratching their heads as well with. And I think it's not just the Indian markets; it could be everything else as well. So this is the Bse Sensex. We're not really trading this. This is just to give us an indication of where things could be moving. I'll just quickly look at the 5-minute chart to give you a picture of what happened. Yesterday was a pretty interesting day. Was going sideways, and then towards the end of the day, it just started moving down. And I think that was the consistent trend that we saw throughout the day. Ups and downs, a lot of chop going on there. Nothing really happening. I mean, if you were trading options, you could make a bit of money, but that's about it. Let's look at the 15-minute chart, and you can see some interesting development here. After that, massive boom here, gap up, and then it was a gap down, almost as if nothing had happened. Came all the way here and started just edging, within this band. And you can see the Darvis box, the bottom and the top envelope here, and it's just been going sideways. Now, things cannot keep on going sideways. There has to be some sort of direction, either out to the upside or to the bottom side. We will see how that pans out. So let's look at the 60-minute chart. And you can clearly see that a bit of a spurt, but if you look at it, we have been within this range throughout the whole couple of weeks, and that is basically chop. if you're trading options or you're buying options, that's not good. Now, the only consolation that you have is you have a squeeze forming here in the last few trading sessions, the last 3 days, which is interesting. There has been a bit of a spurt here, but this is not so consistent. I want to see a lot of white dots and then an explosion to either the outside as a breakout or to the downside as well. Right, so I'm just going to go quickly into the various things that we need to be looking at. One is, of course, the VIX. Now, the VIX is the most interesting because with the VIX you get an indication of how much money you can make on premiums and things like that. So as you can see, around about the 13th, 24th, 18th of March, the VIX had spiked. This is for the S&P 500, and then from there it just started trickling itself down. Now, if you're selling options, you're going to be making a lot of money during this process. We crossed the 61% retracement, we crossed the 50, we crossed the 38, and now we could see a bit more down before. And there's a gap here that you need to remember. That gap will be filled either within the coming weeks, or maybe it could just shoot up and then come and close it down. But the gaps do get filled, and this is very interesting to see as well. So this is the S&P 500 VIX in the US. The India VIX is just as interesting as well. There were no gap ups, but the trend is almost the same. Round about 18th to 24 March, you can see the markets just took a correction, and then things have been just a recovery since then. The propulsion dots, the pink propulsion dots, is an indication that this is going to the downside, which the inverse means that hey, the market could be moving up as well. I wouldn't be so particular about this because you can see some conflicting propulsion dots to the downside, trend momentum to the upside. The momentum bars are reducing, and they could be going to the upside as well, which means that there you could see some more movement to the upside, probably to 61.8 level as well, and that would be very interesting to see that as well. Okay, next one, Dow Jones. Very interesting graph. Again, more chop. A lot of guys were thinking this was just going to be a bounce and a roll over. That hasn't happened. So people, I'll be honest about this. I have been selling, I've been buying options, and this is a killer when you're buying options. This just decreases the value of your option over a period of time. You really don't make much money out of this. I've taken longer options as well so that I can benefit from any long-term trend that is going to happen. Now, what this could do is just go here, go for a flag, and then crash or tumble down. Probably next week we could see a bit of a rise again, because we see some dots forming here, some momentum squeezes forming here. Let's say there's 2 more days, so we have the 11th and 13th and 14th of May, a couple of more dots, and then bam, 18th, we kind of see a drop into these previous levels and test this. And I as the greediness in me says, I hope it goes down to even the lower levels so that we can really start to make some money. And I think if it gets to this level, then a lot of hedge funds and traders will be like up in arms. The crisis, the media will be going crazy, all that stuff will happen, and then you will start to see the recovery, and that will be a very, very good recovery. It will be a cleaning of the entire system, the everything bubble, as everyone calls it as well. So that's going to be very interesting to see that happen as well. Let's see the next one, S&P 500. These are, by the way, some voodoo lines which the guys at Simpler Trading have made. Very good stuff, very impressive stuff. You can see a voodoo line. It's come here, touched here, just stayed there, and it's been within this range as well. Another bit of consolidation going on. Now, if this is also to tip over, we could see this level, 2,600. We could see it going even further low to test the bottom there as well. So that's the S&P. I'm going to spend some, NASDAQ is amazing. It's just been rolling and rocking up to the upside, ripping to the upside. Just amazing. It looks like it could go further. But I think it's going to take a bit of a breather and come down as well. There is one in the Indian stocks, I've seen a couple of them do this as well. This is what you call a V-shaped recovery almost, and it's just crazy, right? Nothing really, no fundamentals I'd say in this. Probably that you have a couple of earnings like Amazon, FANG stocks and all that stuff, but really this is crazy. If this starts moving, then the rest will follow as well soon. So that's the Nasdaq. Let us look at the E-mini down. We can skip that. The E-mini futures, these are the future markets that I just used to keep track of. Okay, so the S&P. Now, this is the one I was talking about earlier on. A lot of sideways consolidation. It looks like it could be going to the downside. The momentum is decreasing. I just want to see what will happen this next week, and then probably from there we can decide whether the market is going down. I have a feeling that we're going to see another correction to the bottom, hopefully to this 25 level again, and that will be the time to get in if you have not had a chance to buy those stocks that we've identified on Zen Capita. We've identified 20 stocks that you can buy for the long term. Hold them for quite some time. I'm going to do a review of them for those who have already bought them as well, and these are the stocks. I have not sold anything other than the pharma stocks that we got. We did not sell anything else, so we're just holding on to them. And the intention is to hold on to them for the long term, and see them grow as India grows as well. So that's the Bse Sensex. I am trading, however, the Nifty, the Bank Nifty and the Nifty. So this is what I'm looking for. As you can see, this is the box that we have here. We have a range of 9,200 to about this level here, 9,900, which is almost like, let's say, 10,000 to the 9,000 to the 10,000 level. This is a wide range, 1,000 points, but you can see a lot of volatility. This was the previous range where we had 8,900 to about 9,500. It was within that range, dropping, broke out of that range, tested, came back in as well. So let's look at the 15-minute just to get a bit more of a closer view. Okay, as you can see, this was the earlier box. It broke out of that, then came back, went back into the box, and has been trading at the bottom edge of the box as well here. So this is what we're going to be seeing. We could go as high as 10,000, and the reason why I put this is also quite interesting. I'm going to remove the boxes. Let me put a 16-minute chart, right? Reduce this. And I'm going to remove the boxes so that we can remove some of the clarity here, get some more clarity. So I was just looking at the open interest on the calls for 14th of May, and we have it anywhere between 10,000 and 9,000. So let's say 9,500. This is probably a good range, or 9,400 to be in. And I've been seeing this as a nice range. This is probably an area where if we can go above this, we can start seeing higher levels. But till then, nothing happening. The good thing, however, as you can see on the 1 hour chart, is the squeeze developing. Now this is a good indication. We've had 1, 2, 3, 4, 5, 6, and the squeeze is just fired. It seems like it's firing to the downside. So if the second one goes to the downside, we could be seeing a bit more of a drop here as well. So that's the Nifty. And onto the Bank Nifty, which I am trading, similar kind of pattern. We've been chopping around for quite some time. I'll take the 1 day chart, and you can see the trend line has been broken as well here. It moved up and then went down, but you don't see the kind of recovery that you do see in some of the stocks that we've been going. I mean, one in particular that we had was Reliance. It's almost close to the top as well, which is crazy in my opinion. But hey, this is the Bank Nifty. The PSU banks are actually facing a bit of trouble, and we can have a quick look at that as well. Let's just take my Indian sector watch list. Okay, we'll start with the autos, and I'm quickly going to go through this. Autos really haven't they've just bounced. That's about it. That's nothing else that has happened there. They've just bounced a bit, and just stayed there. The next one is FMCG. Had a nice bounce almost to the previous highs, but it just could not hold that, and it's starting to see a fall down as well. Any squeezes? No squeezes developing there as well. Let's look at another consumption similar to FMCG. A nice bounce, did a bit of a flag. This was the flag that was forming, and then just started moving down from there. Commodities, somewhat similar to the banking stocks, just went up. Not much of a bounce. It's just going sideways right now. Pharma was the winner, and we did a good amount of trades on that. We made about 40 to 50% in some cases as well. We got out around about here, which is about 24th of April, 27th of April, around about this time. It did correct a bit, but it's still chopping sideways. I don't see much happening here. Once the lockdowns are removed, these could start to fall back to their normal levels. PSU banks, a disaster, which is a big indication of how big a problem India is going to be having. Nifty Bank, as we mentioned before. Nifty 50, we talked about this earlier on. We're looking at an open interest between 9,000 and 10,000 level. So we're going to be pretty much chopping around this unless we fall to one side. Financial services, yeah, a bit of a chop, not going anywhere. Squeezes are developing there. Real estate is a disaster. Now, I've written a report on real estate on Zen Capita. If you a subscribe member, you can actually get it. Even I'll probably publish it for free as well. I have been very, very skeptical of real estate in India. With yields at 2%, you really don't find a good bargain behind real estate. The good days are all over. You had about 10 years of growth from around about 2008 onwards, but that's it. It's over. With demonetization, with a lot of the black money leaving or not being able to move in the system, people are not able to purchase houses. GST 18%, 12%, 18% on the housing. It's a lot, and I think there needs to be a lot of correction happening here, unless I look at things from the point of view of jobs. Now, if jobs are not available, people will not be renting. The only guys who are buying and selling are selling as a speculation, as an investment, but they're not earning any income whatsoever. I have a property. I used to be renting that. I was earning less than 2%, which is crazy. 2% is like I have to wait 50 years just to recoup my money back, and I'm not going to get any of that as well. It's a really, really bad investment, real estate. The next one is IT, a bit of a bounce. They did see a spurt. TCS, I think, came out with some interesting news that they're going to be working from home. I see a lot of potential in the IT sector. I think it could go up in the long term, and we've taken a couple of positions in that. PSEs, well, look, not very interesting as well. Looks like it's going down. Energy has seen a bit of an increase, which is very interesting, given that the oil prices did see a bit of a correction into very, very unusual territory, like negative rates on the forward contracts. But it seems to be picking up, and I think a lot of this has to do with Reliance. Let's look at the Nifty 500. Yep, a bit of a pause in the markets. That's about it. So with that, we've looked at the main Indian sectors, and now I will go back to our master list, and we will look at gold. Gold has been a favorite for many, especially the bulls, the bear gold bugs as well. We talked about the first resistance. It reached that, has tested the high, has just come back down here as well. Nothing much going to be happening for a long time. I think this is it. We will need to see a movement to the high side in order for gold to really kick off. I think a lot of things are happening. The Fed is injecting money into the system. The stock markets are going up. There's a lot of money in the system, but you would be looking at gold and Bitcoin to get an indication, and from what I've seen, a lot of these charts are actually going in lockstep. So if you can see, let's put the S&P 500. Yep. I don't know if I can do that, but you can see here, if I just zoom in a bit. Oops, let's recorrect that. Oh, got it. Let's zoom in a bit. Usually there is a decoupling, or kind of like a non-correlation between gold and stocks. Now, if you see what has happened here, the stock started tanking, gold started tanking as well. The stocks went up, gold started going up, and it's been sideways as well. This is clearly an indication that people are just moving to cash, that gold is not really rising up as people think it is. So unless you see a break from this same parallel momentum, then it's not really going to be worth watching gold. So I'll remove that. Okay, and the next one we're going to is US oil has recovered quite a bit. So we saw that negative, that $1 thing, and then it's come back up. But it seems to be just wavering around. I think the momentum is reduced slightly. And if you want to look at Brent has held its head high as well, but still both of them are below the $50 mark as well. Bitcoin, okay, so we're moving to the halving right now, and I sold all my Bitcoin around about the 15th of April, which is right about here. I thought it was going to go down from here, but it didn't. It started to go up, and I wish I held out and sold here instead. But hey, it crossed the 10,000 level mark and then just fell off the cliff. Now, what does this mean? Well, as you go into the halving, and the halving, for those who don't know, is basically a set formula that was designed for Bitcoin, where the supply is actually reduced. And when the supply is reduced, naturally the price should go up. But when you're reducing the supply, you're making it more difficult also for the miners in Bitcoin to mine. They are actually going to be saying, hey, look, I have all this electricity that I need to spend to mine these coins. It's just very expensive, and therefore you either pay me more or I'm not going to do it. So what you could see is a bit of a correction back into this. If we were to see a 30% correction from this peak, which is what I estimate, we could probably get back to the price I sold, which is about here 6,700, at best 6,500 level. If that happens, I might consider buying it again. Yeah, just in the anticipation that the halving could, after some time, rip higher as well to much higher levels. We could go past this. We could go past this. We could go really high. But the thing is that I see right now in Bitcoin, and I'm going to put out some material for free for people to understand. There is a difference between a currency and money. There's good currency and good money, and the two main concepts that are there are the store value, right? Storage value, and the medium of exchange. And just think about this for a second. You can't use Bitcoin. If you're going to buy Bitcoin, you're going to just hope that it will be going up and down. That's it. It's like a commodity that you're trading. It's not going to be something that you can actually put to use, because the moment you start using Bitcoin or selling Bitcoin or exchanging it for something else, you will be crying later on and say, hey, I wish I didn't sell that. So it's like the pizza guy who spent 50 Bitcoins to buy a pizza. That 50 Bitcoins is like 15 to 10,000. It's quite a lot of money right now. 50,000, whatever, for a pizza. And at a point in time, I don't know, much more. So 500,000. So the point is that people will not use Bitcoin. The utility aspect is not going to be really there if the price keeps fluctuating like this. So the price has to stabilize within like a 1 to 2% range or a 5% range. Otherwise, you cannot use it as a currency for exchange. And that's the thing. If you go to our YouTube channel, Zen Capita, I have actually put that there, the problem or solution, Bitcoin, good currency versus good money. Have a look at that. Try to understand what it is. There's a bit of fundamentals that you need to understand. It's not just trading. It's not just looking at the charts as well. There are plenty of guys like Raul Pal who say that this could go up. They look at all the technical charts. That's all fantastic, very well and good. But he does make a disclaimer there, which I thought was very interesting. He says that if Bitcoin cannot go up from here, from this point onwards, as all the other stuff is working around, the overprinting of money, the price of gold and all that stuff, all the technicals and fundamentals are there, then it does question Bitcoin, right? And it could actually, he doesn't say it could go down, but he does say be warned. And I think that's the actual approach that I would like to take. Has my confidence in blockchain and cryptocurrency gone? No, it is not. But do you think Bitcoin could actually crash? Yes, it could go to 3,000 level as well. So I am just waiting and watching to see what could happen post the halving. If it goes down to this, it might be a good, take a small position and then ride it up, but don't put all your money in. You can risk it if you like. I know some guys who are proclaiming that, I have put my whole trading account into Bitcoin. You can check my account and all that, but you really don't know how many accounts that they have, right? So Bitcoin could be just like 1/10 of what they're trading, or 1/100th of what out there trading. So don't believe all that hype. Be careful, be prudent, make your own decisions, and more importantly, take responsibility for what you are going to be trading as well. The moment you take responsibility, if you made a mistake, move on. If not, enjoy the fruits of your labor. So that's it for today. I hope you found this a useful session. If you have any questions, feel free to send me a message. Either I'm on Twitter, you can leave a message here in YouTube, preferably on Twitter, because that way I can reply to you quickly. I don't check YouTube comments as much as I'd like to. But what is easier is remember to just subscribe to the channel if it's the first time here. Click the bell icon and leave a nice comment so that I can actually feel like doing more analysis and reviews of this. So may your longs go up and may your shorts go down. Take care and have fun.